We're going to be talking about some more, I guess, predictions. This is coming from Forbes. So this is outside institutional money type investing advice. This is not within the cryptocurrency market. They tend to miss a few things within cryptocurrency that are like nuanced that I think you need to keep into account. But we're going to read this opinion piece. This is basically saying you don't have a bottom until you have an event, and they are saying that we are not at the bottom for cryptocurrency yet. So let's get into it. Shark Tank Star issues stark crypto prediction as price of Bitcoin, Ethereum, BNB, XRP, Terra's, Luna, Solana, Cardano, and Dogecoin go into freefall. The crypto bleed out. Can you get rid of that so I can read the article? Forbes is always a little frustrating. Got it. Okay. The crypto bleed out continues. Over the past week, the Bitcoin price lost about 1/3 of its value, hitting a low of just over 20,000 US dollars, but then recovering to 22,664 at the time of writing. Altcoins are bleeding too. Ethereum's price fell 31%. Cardano fell by 16%. Solana dipped just under 10%, and XRP, BNB, Dogecoin, Terra's, Luna are down 15%, 24%, 30%, and 23%. Is the bottom near? While it's hard to see in murky water, Shark Tank star Kevin O'Leary, who made a killing at the height of the dot-com bubble, says he doesn't believe we've hit the bottom just yet. You don't get a bottom until you have an event, he told CoinDesk this week. What kind of event are we talking about, Kevin? Before we let him answer that question, let's take a good hard look at what's going on in the crypto markets as it dumps. Even though we've seen the number of such events, including Terra's collapse and the implosion of the biggest crypto lender, Celsius, they were more an effect rather than a cause of the broader risk-off sentiment than risk assets. See, when we're talking about events, that's kind of where I disagree. I think we've seen some big events. I think we have one more massive event that we're going to talk about today that I've been warning about for a while, which is specifically STETH, which is a wrapped version of staked Ethereum that's been staked and cannot be unstaked. So I do think we have one more big event, and I think that we have the potential for the collapse of DeFi. I don't think that necessarily translates into Bitcoin, though, because you have that kind of standing alone by itself. The collapse of wrapped Bitcoin, yes. The collapse of Bitcoin, not necessarily. But we could see a complete collapse of Bitcoin, of DeFi in general, which could affect the broader market. And that's kind of where I sit as far as events. We did have a huge event, though, in Terra's collapse. It's interesting that they're saying this is an effect rather than a cause. So this is kind of funny because they're saying this isn't the type of event that Kevin O'Leary is necessarily referring to, even though I would argue that it would be this type of event. Who's to blame for this route? Many analysts pin it on stablecoins. However, it's likely the other way around. The crypto market has been chugging downhill since May 4th, which perfectly coincides with the Fed's half-point rate hike. After that, stocks crashed and the tech-heavy NASDAQ lost 13% of its value. That makes sense. Cryptos are highly correlated to risk assets, especially tech stocks. And since they have a higher beta, they work as a de facto amplifier of stock moves. Some analysts compare this sell-off to the tragic bursting of the first major crypto bubble back in 2018. It's interesting that they always miss this. All these big publications always miss the halving cycle. It's really, really funny to me that they always miss it. After going parabolic and blasting past $19,000, Bitcoin lost 80% of its value within a year. But unlike today's sentiment-driven implosion, that crash was largely a result of a chain of panic events. On January 12th, rumors began circulating that South Korea was preparing to ban crypto trading. 2 weeks later, Japan's largest cryptocurrency market, Coincheck, was hacked and staggering $530 million worth of crypto was stolen. Are you guys seeing the parallels here? Are you seeing the parallels of the pattern of what happens? Bitcoin begins to tank, regulations start coming in, threats of bans start coming in, you have hacks start to happen everywhere. This is the same thing. I want you to take solace in this fact that the same thing that happened before is happening again. It's just at an accelerated rate because we are in the digital age now. Then, in early March, Binance lost control of private key, wreaking havoc on the largest crypto exchange. Later that month, the final nail in the coffin was pounded in when Facebook, Google, and Twitter all banned crypto trading ads. Not to mention that all institutional investors laughed off crypto as a Ponzi scheme back then. We're starting to see this too, and a really interesting tangent, I suppose I'll say, is what's been happening on BitBoy Crypto's Twitter. I'll let you guys go read that and take into account for it what you will. And then his talks about how everything outside of proof of work is now all of a sudden a Ponzi, according to him. Now, we're obviously pro proof of work, and I'm glad that he's starting to see the light, but I think that it's a little bit of putting everything in one single bucket. And I think that there's some nuance there that maybe I have missed. However, BitBoy Crypto is the one to watch right now, I think, in my humble opinion, because you're going to get that larger audience sentiment surrounding cryptocurrency as he responds and starts freaking out to the first kind of crash as a cryptocurrency YouTuber. And depending on how he reacts, it's going to influence the larger market, I really do think. So I think it's really interesting to go see kind of what's going on there, how he's responding to, you know, all of the sham coins and stuff that were going on, especially as he was, you know, exposed by a couple different outlets that I'll leave to you guys to do research on. The interesting part, though, is how he's responding to it, specifically as it pertains to proof of stake and proof of work, as well as the Celsius situation. I think that it's definitely important to pay attention to. Many early crypto investors thought it was the end of the world. We all know what happened in the years to follow. Even at today's price, Bitcoin is up more than 3 times in under 3 years. Nobody can tell where crypto will be next month or by the end of the year. But one thing is certain, if recent market actions teaches us anything, crypto markets won't reverse course until investors regain their risk appetite across the board. It's a lot less to do about that and a lot more to do about the cost of electricity to produce a Bitcoin. Not to mention the halving cycle. Once again, all of these large outlets always ignore this and then leave the public to fend for themselves without the knowledge of how the technology is working on the back end. What will end up happening inevitably in 2024 is that the minting of Bitcoin that is paid out to the miners will be cut in half, thereby reducing the miner rewards and the cost to produce a Bitcoin, which will obviously, as always, initiate an initial bump in the price of Bitcoin. The larger public will see this bump. They'll attribute it to some larger risk appetite of investors, and then hopium will start up again, and you'll have that entire market start to boom again. It is easy to see that. That's what's a little frustrating about this when they say that. And this isn't financial advice. This is just me looking at what's happened in the past and what continues to happen today. For that to happen, we will have to get some clarity to several macro headwinds, including the worst inflation in 40 years. Now, this is the aspect that I don't have any knowledge on, admittedly, and how this inflation is going to impact. Remember, the inception of Bitcoin was surrounded by the 2008 financial crisis, the housing market crisis, and it was a response from Satoshi Nakamoto in particular to that. It was a way to hedge against inflation originally. Now, what we're seeing is nothing really new for Bitcoin. The question will be, of course, is will this inflation influence Bitcoin to follow along traditional risk assets and go down in price further below the cost to produce or mint a Bitcoin? And that's where really the question will come into play. A part of that will correlate to the hash rate on, of course, the network. And that is because the amount of hash rate on the network will determine the difficulty to mine a Bitcoin, which will then directly influence, of course, the price of Bitcoin. So you kind of have this weird play where we've talked about before. Typically, you see the price of Bitcoin go up, you see the hash rate of Bitcoin go up, you see the price of Bitcoin go down, and you see the hash rate of Bitcoin go down. It looked like that maybe wasn't happening as more hash rate was going onto the network while the price of Bitcoin was going down, at least early in the year. But now it's shifted back to what we expect. So as the hash rate of Bitcoin goes down due to miners getting priced out, The cost to mint a Bitcoin will go down as well, which could influence, of course, the price of Bitcoin to go down too. These are all different factors and nuanced factors within cryptocurrency that are outside of traditional markets that are often missed by publications like Forbes. The good news is that Root is cleansing the market of overhyped assets, and multi-billion-dollar wipeouts are urging lawmakers to create a clear regulatory framework for digital assets, which can boost their institutional adoption in the long run. Oh, boys. I'm not a fan of that personally, right? So when we're talking about more and more regulations, this is the same thing, though, that happens every single cycle. So don't be surprised by it. The question will be is how far ahead do they push this? How much regulation will they put on the industry? And how much appetite do institutional investors have for cryptocurrency with the down market? Will they continue to invest in cryptocurrency and lobby for regulation? Or will they kind of put it to the side and look at different options? The bad news, O'Leary thinks the great cleansing is not over because we haven't really seen a cascade of panic events that he thinks define the bottom. He believes more crypto assets are headed for zero value. I do agree with that. And like I said, the DeFi contagion is a big worry surrounding Ethereum. Panic events define bottom, said O'Leary. In the crypto world, we need someone to go to zero. Now, technically, someone has gone to zero. Terra Luna has gone to zero. So that big event has happened. Let's not just ignore that as one of the events so that you can create an article that says it's going to get worse. Okay? You can't actually do that. It doesn't make any sense. But every day I put out a story that explains what's driving the crypto markets, and you can subscribe there. That's from Dan Runkenvisis or something like that. We'll just go ahead and ignore my inability to pronounce anything in my low-level Southern knowledge of names. I hope you enjoyed this clip from the Crypto Mining Morning Show every Monday through Friday, 7:45 a.m. Pacific and 10:45 a.m. Eastern Time. You can check out more clips here, or if you're interested in checking out the entire live show, you can check that out down here. Thanks for watching, and I'll see you next Tuesday.